We're going to start out with the Fed because today was the release of the Fed minutes, and there are some important things to discuss in here. So first and foremost, I had taken some notes initially, and then I went back in and I wrote down some more stuff. There are a couple of contradictions in the Fed minutes. I don't know if it's because they just recycle and they kind of don't update it, the whole thing, but let's just go through these. I'm just going to go through my notes. It was reported on TV that another rate hike was soon warranted. I would beg to differ with that based on the minutes, and I'll get into that. They were concerned about their inflation falling short of 2%. They wanted to wait to see if the job market improved. They're concerned about a lack of business investment, and the Fed actually goes into some detail. It's a little bit wishy-washy, but they say that some of the members have contacts in commercial construction, and a lot of the stagnation has been because of their inability to gauge growth and their worry about policy. So that seems to be what the Fed is aware of: policy, fiscal policy. Let's see. They talk about near-term risks diminishing, but I'm going to get into that a little bit more in depth in a minute. They were happy about the prompt recovery in Brexit, but they were concerned about the longer-term concerns in Brexit, like the negotiation causing market volatility. So they're kind of on hold with that. They were happy about the jobs numbers being better. And then they were concerned about people reaching for yield. That seems to be the ones who want to hike seem to be worried about a market that can get out of control, and people could make bad investments based on stretching for yield. I often say that you want to always have good credit quality, and the reach for that extra little bit of yield usually winds up in disaster in the end. Some more notes I took. Overall, they basically want to see more data as usual. They are expecting more energy bankruptcies. They go on to say that they think oil is going to strengthen, but why would they be expecting more bankruptcies? That doesn't make sense. They're very concerned about Italian banks, apparently. That kind of flew under the radar today. They think that and other European banks could potentially cause some instability. Italian banks, though, were highlighted in the minutes. They talk about GDP. These are the big risks they see. GDP slowing, and they see the risk to that is still to the downside. The foreign risk in terms of the global economy, they see, and they say that risk is still to the downside, even with Brexit having resolved and the markets resolving. They're still worried about potential ripple effects. And then they talk about inflation being soft because of soft import prices and energy prices being soft. But then, like I said before, they're expecting energy prices to firm. So those are some of the issues. Let's see. They talk about, this is interesting, they are excited about the employment numbers being better, but they do mention, of course, being part-time, and they go out of their way to highlight that the rate of change is slowing, so they know the employment numbers are not all that hunky-dory. They also go out of their way to mention that minorities, particularly African American and Hispanic, unemployment is higher. So I guess now they're racist if they raise rates. I'd love to see a Black Lives Matter protest outside of the Federal Reserve. I might even pay to see that. So yeah, they're worried about the minorities there. Janet Yellen, by the way, a lifelong Democrat, so I can see her being very sympathetic to that cause. They talk about family generation being slow. I always call that the life deferral kind of plan. Like, people are not getting married as young. They're slowing having families. And that's kind of the notes I took there. They mentioned this, like I said, the ones who want to hike are worried about this CRE, what they refer to as, I believe it's CRE. They talk about the value of the stocks over their earnings, meaning that the equity prices are a little bit rich. And, listen, they caused it. So, they're going to kind of reap what they sow there. So some of my interpretations on what I just read to you. This is a recipe for lower for longer. They are not raising rates anytime soon, in my opinion. It seems to me that September is pretty much off the table, and I might even have to take December off the table after reading some of this. I want to see more data. If they do raise in December, it will be more of a ceremonial hike as opposed to rapid inflation concerns. Because based on the stuff discussed in here, with the risks to the downside being in GDP, foreign risk, and inflation, that they can't even reach their 2% target, and the risk is still to the downside in inflation, they have no business raising interest rates. If anything, they should be doing more easing, more QE to get that up. If the Fed is really worried truly about the risks in the market, they should be raising margin requirements, not raising interest rates. If they're worried about rampant speculation, and they mention that there are a few instances where they see a little bit of speculative problems, but overall it's really not that high. They even go on. There was a piece mentioned, by the way, on the TV, and I want to get into this because I read through this. They say that they're overseeing their monetary response, how they will handle financial crises in the future. And I think the reporters who touched on this made it seem as though the Fed wants to kind of withdraw their easing. If anything, I have to tell you, I read it the exact opposite way, that they're looking for more ways that they can intervene in markets during times of tumultuous times. They're not looking to withdraw, they're looking to do more. So they mentioned this is going to be a study, by the way, that goes on. It sounds like a fishing expedition to me, that this could go on for quite some time. But they noted that more people are risk averse, and there's a more fundamental underlying bid on treasuries, and they also mentioned that the business models of financial institutions have changed. I mean, they've been crippled by regulations and low interest rates. I mean, they can't do anything. They're the new utilities. I am not a huge fan of the financial companies. Someone was asking me about Citigroup and Bank of America. I saw that a minute ago. And listen, if you can hold these things longer term and you want to just sock them away for a long time until regulation, maybe a new administration comes or regulation gets, less onerous. These are not expensive. I believe that U.S. banks are in much better shape than their European counterparts. Of course, there's always counterparty risk, and then when things go badly, everyone wonders who knows what and who's exposed to who. Citigroup seems to be making some equal highs off higher lows. I mean, if you can clear, it's good that it's over the 200 MA. You really kind of need to clear that 1530 area. I'm sorry, in Bank of America, I meant. And then Citigroup is a similar pattern, but not quite as strong. That really needs to clear the 4784 area, kind of make a new swing high off the low, and then I would say that the pattern is sort of shifting, although it does look like it's kind of shifting. I didn't get into financials into the weekend review video. That's my bad. I had wanted to get into that. I had noticed a couple of things playing out in like JP Morgan. That's a failed head and shoulders pattern. It's weird. It backed off a lot, but it is still above. It checked back to the old kind of downtrend line, and now looks like it's making a line back higher. You could just use that last swing low if you're with JPM. 64.86. Anything above there to me is still okay. Anything above 66.20 to me is even still firmer. Morgan Stanley, I believe, is a very similar, also failed head and shoulders, and that one is actually if you're looking for a financial, the best of the lot, Morgan Stanley has the best chart of all the fins. I think it just got too cheap, and it's a premier franchise. I would be a BTD guy on Morgan Stanley, particularly any checkbacks to the 200 MA. So now that we cleaned that up with financials, let's discuss my view on the market here. I overall am still not thinking the top is in. However, we had a very poor high on Monday, and I'm talking about ES and SPY. So you had to basically, I mean, I guess what you consider could consider in SPY almost an island reversal up there. It was like a gap up, topping tail, and then the next day was a bit of a gap down. So I think a lot of shorts are probably using that as a stop. Today was a kind of a look below and fail, I would say. It basically held the 20 MA. I hadn't noticed that that pattern on SPY, that sort of islandish reversal. That could, listen, it could be, you could be, up near a top here. It's very possible. For me, I'm just seeing this as kind of range chop. I often say you can use Fed day ranges as your gauge. So we now have a gauge, a really good gauge, actually. You have 218.53, that was the high of day today. Anything back over there to me is probably more bullish than bearish. Anything to now below 217.02 to me is probably a little bit more vulnerable. Maybe there would be a pullback. There's a gap to fill still at 216.41. And you could maybe even see, back into the 214s or maybe even the 212s. You have a rising 50 MA up around 213, so, and you could pick that area anywhere. I mean, I think that the market is still kind of healthy if it has a check back to somewhere between 212.52 and 213.78. Although that would be a little bit iffy because you're below that candle. I'm just going to use that Fed day range. Anything above today's high to me is more bullish than bearish. Anything below the low is probably a little bit more iffy, considering the low basically held the gap range low from the 8-5. That low was 217.07. Today's low was 217.02. That's why I'm saying it was a bit of a look below and fail. Any move back below there, I think, will attract sellers. All right, so that's my view on SPY. The Qs are still kind of holding up a little bit boss style. Cisco was a little bit weak in their earnings. I've talked about the Cisco level in a tweet. I said that let's keep it simple. 30.31 was the last peak high. If it can hold there, it's all right. I'm willing to give it a little bit of room to 30.20. Cisco needs to hold 30.20 to 30.31. If not, it could be a little bit more iffy. So we'll keep it simple like that. Same kind of note with Apple. They got the 110. It was sort of like got there and closed. It closed that gap from 109.85. It pulled back rather sharply here. The key for me with Apple is on the 5-minute chart, the 200 MA. Needs to hold over there. Anything over like 109.19 is still kind of okay. And over today's high, of course, 109.25. So anything back over there is a little bit more firm ground. Back below is maybe a little bit more iffy short term. Let's keep that real simple. Sticking with the Fed, a couple of things I was watching with regard to the Fed today, and one, of course, was interest rates. And the other was the dollar. The interest rates are really just chopping around. It held the 50 MA yesterday, and today made a higher low and closed up near the highs over yesterday's high. And as long as it's above 138.5, today's low was 138.5 to the tick. That was an old reference high that if you look on my weekend review, you can see on the charts. So it held right where it needed to, kind of bossish. I would say that it's just in a consolidation pattern here. I mean, you could even see interest rates get back down into like TLT back into 135 and 133 and still be rather elevated. So I don't see anything in that Fed statement here to make me think that they're looking to hike. The dollar had a bit of a look below and fail. I said that the big risk to the rally here was a strong dollar. Conversely, a weak dollar is very good for the stock market because a lot of companies do business overseas. Today was a bit of a look below and fail. I've been using that UUP, and I talk about the range, that 224.47. Yesterday held to, it got it. It didn't quite get there. It was 24.48. Today was a look below and fail. We closed back in range. I guess you could use today's range as the guide there. So anything back over 24.58, the dollar probably will firm a bit. Anything below 24.43 probably could catch some legs to the lower 24s. Gold. Someone was asking about gold. All right, so gold is just doing a big consolidation. You have 1, 2, 3, 4, 5, 6, 7, 8, 9 days now of consolidation after the gap down from a few days ago. Really, really simple. Let's just use those range extremes as the trigger. Anything over 129.26 probably goes higher. Anything below 127.20 likely goes lower. I would think you'd get a 50 MA test there pretty quickly, the 126.43. So the pattern in gold to me looks like it likely wants higher, but I need to see that trigger point. I don't like to jump the gun and anticipate. Someone asked about GDX, not one I cover very often. This just looks like it's consolidating. It could be forming a bit of, believe it or not, it looks like it could be even forming a bit of a head and shoulders, but that's a bit of a reach here. Listen, as long as this thing holds like the 50 MA and trend, like I would be an interested buyer down in like the low 28s, maybe high 27s for a right or right out trade. That's basically a trend touch. I don't like to anticipate tops or bottoms. I like to see the security show me. So until this thing snaps trend, I have to assume that the path is still higher. We're getting that late day sun here again, which is really annoying. Hold on, I'm going to just grab my Yankee cap, which I don't have. So we will use a fedora to block the sun. Sorry, I'm sitting right by a window here, and it's very sunny. So we're blocking the sun a bit, although this isn't doing such a great job. All right, so I'm assuming the trend is your friend here until it is not. The kind of the punch out level was 30.68. Today's high of day was 30.62. So I think you could use today's range. If you get back below the hammer, I think there's a quick short probably to the 50 MA, maybe to trend. The 50 MA is currently 28.73. Trend, if it happened tomorrow, which it probably won't, would be 27.95. Back over today's high, I think you have a throw likely to new highs. People are still asking me about GoPro, amazingly. I'm just going to go through this list here. Actually, I want to just take a quick look at silver. That's one that is making it just kind of like looking a little camelish. It's, silver broke out above the channel. Today was a touchback to the channel. 50 MA is right below. This to me, this is a little bit iffy here. I would need to see a trend snap here because it did have a bit of an island reversal off those highs, and you can draw that trend line right from the top, and of course this tool is not working that well for me here. Just wait for the trend snap back to the upside. I mean, this also, believe it or not, could be forming a bit of a head and shoulders, a top, which would be that would be very interesting, because if that did occur, that could mean a bottom in the dollar, which would be issues. So I'm keeping an eye on that, on the 50. Let's just say 50 MA. If it can hold the 50, I'll be okay with it. Anything below there to me is more iffy. I had a silver position. I sold a little bit too early, but I would get back in on any real pullback into range. Maybe like in the I don't know, 16s. I would be a bit of a buyer again. Anyway, let's just go through some more of these. Oil. All right, so I pointed out the outside day. I believe that was on the 8/11. I said ignoring outside days, either upside to the downside, is dangerous, and it sure ripped higher. Even on some bearish news, you had rig counts that were up, and which are you have rig counts that are going higher, and there was originally some bearish inventory. Although today's inventory was actually bullish, it was a bigger than expected draw. And gas was also a drawdown. So today, the pullback stopped ahead of the 50 MA, and then today you finally got the close over the downtrend line and yesterday's high, which to me is still a little bit bullish. You ran a lot. This is really into a volume distribution here. I am expecting a little resistance here at between 46s and 47s, but as long as you're holding the 50 MA, the path for me with least resistance with oil will probably be higher, and you could maybe be back in buy the dip mode. I always say that the tell for that is Exxon. Exxon is kind of bear flagging out down here. Exxon really would need to get back over the 100 MA for me. I do think at some point this is going to fill that gap and have a check back, maybe to like 92s. But if there is another leg down in Exxon, we could easily start looking into the fibs. First points would be 84.70. The first fib is 83.55 to 83.01. That's a really key level. And then maybe if the market really gets jiggy, you could see 81s. I will be a put seller into that area, considering we're down from 95. I think that I would love a flush in Exxon. We may not get it, but anything down near that channel low, which is, like I said, if it happened tomorrow, it would be 78, 79. I'm not thinking that is going to be the case. It's going to be a grind. So if I had my druthers, you'd have a 61.8 touch with a channel touch at 81, and that's where I'd be looking to pull the trigger with selling out of the money puts. We're still contained here in the gap range, so there's nothing to see here. You'd really need to get back up above 89.01 or below 86.12. For continuation. Below 86.12, I think that there could be continuation to the downside. Moving right along into, someone was asking me about GoPro. So everyone knows I'm not a huge fan of GoPro. I said this thing was going to be single digits, but their quarter was a little bit better. They're probably, hope springs eternal here. Their comps going into the holiday season are going to be better than last year. So I will get bearish again on GoPro next year, likely. I do think after they report their Christmas quarter, which will probably be better than the last. I've talked about this in the past, the total addressable market, also known as TAM. I don't know how many people who jump off buildings, with chutes on their back or bungee off bridges. How many of them are there? How many people are driving their bike down Everest? How many dentists don't already own this thing? I mean, to me it seems like, and what's the reason to buy a new one? I mean, it just seems to me very unlikely that people are going to shell out 400 or 600, whatever these things cost, maybe in the twos. So if anything, I see their margins coming down. I see their profitability coming down. There is no subsidy like an iPhone. There really is no reason for an upgrade on these unless your parachute doesn't open and you crush it, and then there's no reason you're not around anymore to buy another one, or you were swallowed by a shark or whatever. So I just don't see this thing longer term having a lot of legs. But I will say from here through the end of the year and maybe the first quarter, I'm kind of okay with it. If you want to ride it, as long as you're holding the 200 MA, I think that it probably would go a little bit higher, and I would be buying dips near the 50 MA. Longer term, still bearish. Shorter term, I think that there could be some more bounce to the ounce. This thing is nearly almost doubled off the bottom, though, so I wouldn't be chasing it. It would be more of a buy the dip type of thing. But longer term, like I said, not a fan of GoPro. However, I can't ignore that they didn't have a new product last holiday season. I highly doubt as incompetent as Nick Woodman is, in my opinion. He's buying yachts while his stock is collapsing. Unbelievable to me, by the way, after having pre-locked. First of all, when a CEO unlocks stock, I don't care if it's for a charity or whatever it is, that to me is a no-fly zone. I've hated that stock ever since. You got to think that the morale is you have employee stock options that are completely collapsed, and this guy's buying mega yachts. Not a big fan of that type of incompetence. That's almost what you would expect over at Twitter, right? Anyway, we'll get into Twitter a little later. So I do think, like I said, the comps are going to be better, so the stock probably will be kind of okay. They're not going to make the same mistake of not having a new product for the holiday season this year. If they do, God have mercy on their souls. Speaking of Twitter, it's been rallying, right? It had the gap down. It just seems to me that they keep trying to sell Twitter off. At this point, who is left who's long Twitter, who's willing to sell low? It just makes no sense to me. The company itself isn't even that expensive anymore. They do have some cash on balance sheet. It rallied up a lot. It's been up on speculation that Steve Ballmer is going to buy the company, believe it or not. That's why it's been rallying. I think I can take this off. It seems like the sun has receded a little bit. I would not be chasing this. Listen, it's done everything technically correct here. It filled the gap. It had the pullback down. The downtick, by the way, from the gap down on earnings was almost to the tick. It was one tick below the 61.8 fib of the range, and now it's extended past there. This pattern, I have to say it in Twitter, is higher lows and higher highs. It looks like a rounded bottom to me. This starting to feel, and by the way, the company is nowhere near as cheap as Yelp was near the lows, which I called almost to the, I wouldn't say to the tick, but it was down in the 20s. And I said that I thought the company was too cheap, and Yelp has rallied significantly since then. It just got too cheap on an enterprise value for the brand. Twitter, that is not the case, but the pattern and the feel of the stock, the negative sentiment, it's feeling a lot like that to me. So as long as Twitter, to me, can hold the 200 and the 50 MA on pullbacks, and those are quite far from here. Short-term 1890, I would say you need to hold. That was the last the last swing high. I'm okay with owning it. I happen to own a little bit of Twitter. I've not been a huge fan of the company or their management. I wish that they would develop product as quickly as they hire diversity directors. Unbelievable. I don't want to get into it. If I do, I'm going to get myself real angry. I don't like how they have. It is all right. We're going to do it. I can't. I feel my blood boiling. We're going to do a little bit. I'll try and keep it quick. But Jack, on the conference call, he's like, he's talking about things that they've announced. Why haven't they implemented it yet? It was from the last earnings call. He was still talking about it. It's just amazing to me that they still have not taken out the URL character count for the 100. A phone call that came in that messed up my feed here, but I think we're back. If someone could just type that they're seeing this, I hope it worked. Anyway, it astounds me that they have not implemented some of those changes yet that they've announced now months and months ago. I mean, what are they doing over there? I don't understand it. The innovation is so slow. They are ceded amazing amounts of market share to Facebook, by the way, which is executing flawlessly. That quarter was a thing of beauty. They killed it. Really fantastic. I'm going to have a little bit of a surprise for you in a minute of a very interesting call here. Which I'm teasing a little bit, but we're going to get there. No one mentioned Facebook. Facebook is just, by the way, doing what it always does, the same chop. I talked about Facebook in another video that I explained why Snapchat isn't really the threat that everyone thinks it is, because people are using Instagram for their careers. If you're if you are new to me, if you're a model and you want to get work, I'm talking about female models who are gorgeous, they need to have Instagram accounts with 10,000 or more followers, or the bookers, their bookers won't even talk to them. I know this because I know these girls. That is the truth. People are using these Instagram accounts as business models, and I do believe that there's a ton of room to grow in there. Snapchat is just not the case. Older people are not using Snapchat. I don't even want to talk about it. I feel like I'm getting old. Listen, I'm on the right side of 40, so it's okay, but I'm getting closer and closer to the wrong side. Sorry for those of you that are past 40, but anyway, you're probably not on Snapchat anyway. I think Snapchat has the potential to be a great app in the future, but it just doesn't have people who are spending that much money, or the people who have credit cards who are spending the money. It's more young kids. So and they're all on Instagram, by the way. And now with Instagram, with the new stories, they are going to be eating into Snapchat. It's only a matter until they start getting their own filters, and then it's kind of lights out for them. So that's my take on them. Let's talk about another tech company that did also report an amazing quarter. and that would be Alibaba. I was going through their quarter and their conference call, and I was trying to think about a comparison to why they're doing well. And my take on it is this, is that they crushed their quarter, by the way. They added in a ton of users, and they have a lot of growth in their web services division. Can you think of another company that's at near 52-week highs that has that? The answer to that would be Amazon. If Baba, and let me tell you, they are in a totally different market. You know, they're protected by the Chinese. Jack Ma is in with them. He's like boys over there. If they can replicate what Amazon, and this is a huge stretch, a leap of the imagination here. If they can replicate Amazon Web Services in China, this stock could quadruple. And I'm not even exaggerating. I mean, this thing could be up huge. Short term, technically, it is getting into some measured move levels. It filled the gap to 98.45. I go through a detailed, it's overbought in the money flow and all that. I talked about 99s to where was it? I did measured move projections to where this thing could potentially top out. Unfortunately, the high is in the way of those. I believe it was 99.94. I talked about 102.52. 104s would be roughly the mean move, and then 110 would be the extreme. Short term, you could use, if you're very short term in this thing, yesterday's low, 95.05 would be a good pullback low to you could use as a stop. But I am now interested in Baba for the first time in a while, potentially on pullbacks. It's cleared out a lot of the consolidation range in the 86s. If this thing does have some kind of dump and pulls back to that gap fill, I would be a very interested put seller. This stock has been very inconsistent. I think what happened was it came public. You had a lot of people. It was a big market cap stock, and funds took profits. It came public at a very funny time in the market. My guess is this could chop for a while and whatever, but I think that this stock is likely going to go higher. I would be a buyer on dips. I like short term though. 95.05 is a stop. Again, the sun is out. We're going to use the hat here as a block, but I do think that this. I think it's going higher. Short term, it could pull back, but I'm now looking to be more of the dip guy in there. I want to see their next quarter and how that develops, but if I were Jack Ma, the model that works here. You know that the web services is the growth where Amazon did it, and it's not like Amazon is going to go into China and be your competition. These guys have scale. They can roll this thing out. It would be amazing. That's what they should do. If I were them, that is what I would do. So that's my new call on Baba. Some of the other momentum stocks, and I don't want to go too late here, like Netflix is starting to look a little bit better. Really choppy, sloppy, messy. As long as this can hold 92s, 93s, I think it's kind of okay. I don't know what kind of upside that this thing will still have. I mean, it'll probably fill some gaps. My guess is it'll get to 98, 100, maybe eventually back to 108, but it's kind of just chopping along. I would be, I guess, if you can get over the 97, 74, that's really the flagpole here. Then I think it's going to probably get a 200 MA test, which is currently at 101. Anything in this range is kind of just chop. If on dips you want to maybe sell some near dated puts here. It's been acting better. I've been watching the tape. It seems like it's under a little bit of accumulation, just to my eye. Not to jump topics too quickly, but another thing to my eye, this Bristol Myers. A lot of people were piling in the first day on the gap down, and they were like, oh, this is how professionals trade on Wall Street. Oh, no. That is a recipe for disaster. I like to wait a few days to let it shake out. There are really very rarely such things as one-day events. However, today, on the lows, I was kind of just been stalking this thing, watching it, and today, for the first time, I sold some out-of-the-money puts. It's not that much juice in it. I did very small in October, but I might buy some shares. This was more of just a tester to me. 57.94 like to 57.5-ish, maybe a little lower here. 56.32, somewhere in this area. This is probably going to bottom at least short term. I was watching the lows today, how this stock was trading, and when I did it, it was at like the dead low. I was watching the stock on like a 5-minute chart, and I was watching how the stock was trading. It was making new lows, but like by a tick and then rallying up, and then by like a couple of ticks and then rallying up. It just seems like the sellers are getting a little exhausted, and if you're still long this, you might not want to continue to sell. Anything back up above 58.38, it could continue to rally. Back below today's low, you might have another dollar or so downside short term. Listen, longer term, this thing could go significantly lower. This thing could even get back down. I don't want to scare anyone, but this thing could, believe it or not, get down to the 48s if there really is a big kind of collapse. I see a lot of reference support, though, in the 50, like I said, the 57s-ish, 54s, and 51s. I think that will really be the end of it down there, at least until it gets, because keep in mind, this is coming from an all-time high. I would be shocked if this stock doesn't at least try to test into the gap at some point over the next few months. So I do believe that there will be some rally. This is like day 9 here of a sell. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. Day 8 of the sell-off after the gap down. And it really didn't have very much rally. So it's starting to get a little steep. I think that this will probably start finding a little bit of support here. That's just my take on BMY. Zillow Group was another one someone asked me about. I'm kind of now getting a little bit rando in terms of where I'm going with this. The order. Yesterday was a really ugly outside reversal day. Today you have a hammer down near some reference lows, down near the 32.85. The low was 33.02. I've been thinking that this could maybe even fill down to like 30.5, which would be a gap fill and the trend line. Full disclosure, I did sell a little bit of puts in here. I think 30 or below. I forgot what strike. This is coming from a high and a move. Listen, this thing moved a lot. It went from 1645 up to the 40s. I booked some profits up there, and now I'm starting to sell some of those puts again to get back in. Zillow Group, listen, if the market gets sloppy, you guess you could go down to 25 again, but it just doesn't seem like that. This is like a Google to me or a Facebook. It's a disruptive technology. I have family and in the real estate industry. It seems these guys own that market, and it's all moving from on print ads to online, and these guys are the epicenter of that. Their quarter wasn't as bad, I don't think, as they're getting pancaked for, but I just think it ran too much. It was up too much, and it's pulling back, and we'll leave it at that. I'm looking to buy the dips. You can use today's range. Anything below, you could use today's low as a stop. Above today's high tomorrow would be maybe a right or right out trade. It's still a little iffy because it's below the 50 MA. The 20 had been the main support. The stock has room to the downside, but as it comes down, I want to start selling some out of the money puts in that name. The REITs I'm not prepared to talk about right now. Let me look at Vornado. That's one I've followed for years. I'm doing this kind of cold. I haven't looked at this stock in a really long time. The high was a punch up above channel high, and now it's pulling back. You got to hold the 50 and like 100 MA in here, or it's a little bit vulnerable. I would probably have been more of a seller here on some pops in that stock. I do like that. I shouldn't say I like. I would have. It looks like it's gonna. It looks like it's pulling back a bit. I might get a little bit interested if it came down to like the 200 MA. To me, that would be an area to maybe sell some out of the money puts. But this got the channel high. Maybe you get a mid-channel move. Yeah, that's my take. I'll do a little bit more work on the REITs though in the coming videos. IBB I've talked about in the video in the last couple of videos. This I said came up from the bottom. The breakout was suspect to me. It's now checked back. It's basically hanging around that area. You have a bit of a lower high from 2 days ago. If it can hold 288.01-ish. That's the last swing low. It's probably okay. 286.81 to 289.71 was the last kind of breakouts. So, I mean, between there and the 200 MA, it's still kind of okay, but I like that it's going sideways. It needs to work off some of that that froth. If it does pull back, I mean, maybe this thing will make a move back down to the 275s, so 271s, where you probably could be a out-of-the-money put seller or a right-out share buyer. So those are the levels it needs to hold. If it fails, it's going down to the next set. If it can extend up, then maybe you see the 315, which would be the 1.618 fib extension of the last range. Yeah. A couple of quick ones because they've been moving, and then we could maybe end on them. This Twilio, whatever. Yeah, this thing is a monster. Once it broke over the 44.80, I said it was going to get the 2 times range. It did it really, really fast. This looks a little parabolic to me. That was the 65.94. It shot to 66.40. You got to book some profits in this thing if you haven't already. I mean, if this could go sideways and consolidate for a little while, then maybe it goes back through it. The last 2 days have been lower highs and some lower lows. I'm a little cautious. If you don't want to overstay your welcome in stocks like this. I said to book some profits around 65.94. I'm going to stick to that call. Just that simple. ACIA, another one that's just kind of ripping. Round and round she goes. Where she stops, no one knows. I just wish that I owned this thing from. I've never traded this stock. I've been watching it. It's now above any channel high. This thing is just kind of going parabolic. I've talked about that. I thought that this could maybe even make it to 125s in the last weekend review video. I said I thought it would go higher. It probably will still go higher. 125s would probably be where, if you're long, where you'd probably want to look to book profits. If you want to use a stop, I mean, unfortunately, it's far. I mean, you could use 109s, you could use 97s. I mean, it's just moved a lot. It's hard. There's no way I could justify first chasing this, but the stock will likely go higher. Anyway, just wanted to see, was there anything else I wanted to talk about? Oh, Lululemon, someone asked about. The 82.50 is an important level. You probably want to look to book some profits in there. I think that this stock will likely go higher over time. I've liked this stock for a while. I think last year I said it was going to be one of my stocks of the year. It wound up being pretty good, right? It had hit where I thought, actually around this level the last time, which is when I had said to kind of pull the ripcord. It pulled back a lot. Now we're getting back up to there. It's come a long way quickly. I'd be looking to book profits here on spikes. Look to see if it could kind of chop sideways a bit. Same kind of thing in Google. Once you get back to these reference areas, it's good if it kind of just simmers under there for a while and then goes. If it moves too quickly, it usually is suspicious. That's my story. I'm sticking to it. Let's just use the Fed day, range here today, or the Fed minute range here as a short-term gauge. Below today's low is probably a right or right out short. Above the high, I'm thinking we're still going to then see the 221s, which would be the 1.618 Fibonacci extension on the SPY. If you came into this broadcast late or want to watch it again, you could see it on my YouTube channel, which I will upload now. That is Justin Pulitzer Trades on YouTube. If you're not following me on Twitter, my handle is @JustinPulitzer. Let's have a great week, and cheers.